Today I'm going to be giving you the ultimate guide to being able to consistently trade profitably in the stock market with options trading. I hope this video adds some value to your trading journey, as this stuff added a lot to my trading journey. If you don't know who I am, my name is Dylan. I run No Limit Trades, and 2 years ago I was trading completely unprofitably. I was losing tons of money and I had no idea why. So now, over the past two and a half years, I am here to bring you exactly step by step what I did to become a better trader and become profitable almost every single time. Hope you guys are excited for this video. Let's get into it. Alright, so as you can see here, this is our game plan, and just looking at it very quickly, you're gonna see that there's not much to it. But I am going to tell you in depth that this is exactly my trading strategy and how I stay profitable. The first thing is gonna be understanding support and resistance. Now, I'll get into it a little bit deeper once we get there, but the reason why support and resistance is so important and so key is because these are levels that are main supports or resistance, meaning 9 times out of 10 when a certain stock reaches this price, it is either going to bounce off of it or reject off of it, which is very key. The next thing is going to be patterns. In my opinion, patterns are one of the most overlooked strategies in trading stocks. A lot of people hate on it because they say, oh, well, you can't just trade based off of a strategy because if it's a double top, then it could also be this and this and this and that. But I will get into exactly why I think patterns are a very strong piece of information when it comes to trading profitably. The third thing is going to be execution. There is a very specific way that you have to execute on your trades to make them profitable. If you're not able to execute properly, meaning you execute late or you execute in the wrong way, you're going to lose out on a lot of profit. And the fourth step is going to be closing your trades. This is one of the most important out of this entire list, is going to be closing your trades. So without further ado, let's get into it. The first one is going to be support and resistance. Now, support is the price level at which demand is thought to be strong enough to prevent the price from declining further. In simpler terms, buyers are very strong at certain levels, as are sellers at other levels, which comes in at resistance. But when you have a lot of people selling off and you see the stock starting to die down and you see a big bounce, that is going to be your support. That is a very specific levels that buyers come in and buy back the market at that specific price. And a lot of these times I am talking about big buyers. I'm talking about big movements. 9 times out of 10 when you're trading support and resistance, there are huge moves. The reason being is because it's not us, it's not the people like us that are day trading that are moving the market. It is the big institutions that are taking their huge amounts of capital and pumping the market at that certain price. The next thing is going to be resistance. Resistance is the price level at which selling is thought to be strong enough to prevent the price from rising even further. Meaning the same exact concept. When the price is rising, there are sellers that come in and take the price right back down at a very specific price. This is called a reversal, and this is also called support and resistance. Now, this is very key because if you start to understand support and resistance enough, you are going to be able to make trades directly based off of support and resistance. Meaning that if you know the most recent support level, let's say it's 400 on SPY, if that is the most recent support level, it tested it 3 different times, 9 times out of 10, it is probably going to test it again and bounce directly off of it. And when you're able to capture that information and use it in your own trading, there is literally support and resistance at every minute in the market. I'm going to show you right now an example of what the market looks like from day to day. As you can see, this is my trading view, and this is what a typical day in the market looks like. This is actually 2 different days, but this is just regular price action movement on the S&P 500. Now, I'm going to give you about 5 seconds, pause the video right here, and I want you guys to see if you can tell me, just based off of what I just read you guys and explained, if you can tell me where the support and the resistance is. I'm going to give you 5 seconds, pause the video, and let me know if you find it. Hopefully you paused it, maybe you were able to find it, maybe you're not, but if not, that is okay. I'm going to show you exactly where the support and the resistance is. As you can see right here, I'm going to take my mouse and show you guys exactly what I'm looking at. You can see that this is a resistance level, and I'm going to tell you exactly why. Because as we can see here, this is the price of the S&P 500 or SPY. You can see that we came up here, we tested it, but we rejected off of it. Came down here, came back up, rejected. Came back up, rejected. This is the 3rd time rejecting. Came up here, we actually broke through it, but this was a liquidity grab, as you can see, as well as this. Broke back down, rejected. Came up, had a really strong hold, but then rejected all the way back down again. Up, rejected. Up, rejected. And as you guys can see here, there is clearly a pattern going on here. You can see that something is obviously happening a lot of times. Now, with this being said, you could also literally flip this chart upside down and it would be the same thing for your resistance. And it really just depends on the time frame that you're going off of. but support and resistance is a huge factor in trading. Now, getting into patterns, this is something that I think is super crucial, but it's something that other people disagree with. So getting into patterns, there are many different continuations and reversal patterns to look out for when you're reading the stock charts. Stock chart patterns can help you identify which direction the price is bound to move towards. I accidentally typed bounce, ignore that. Based on the bulls and the bears, right? So obviously we know the bulls are the buyers in the market and the bears are the sellers in the market. But occasionally when you're looking at stock charts, there will be patterns that form frequently. These patterns aren't just like a checkerboard. These are very, very specific patterns that I'm about to show you right now, in which 9 times out of 10, I'd say maybe 8 times out of 10, the market reacts exactly like this when you have patterns like this. So as you can see here, this is a list of a couple different patterns that form in the stock market. One of the most easy for people to start to understand and start to trade with is going to be the double top or the double bottom. Now for right now, I'm just going to focus on the double bottom pattern just to kind of show you guys an example of what patterns are like. For double bottoms, we want to make sure that we are in a downtrend, meaning that the stock is trending downward. We make lower lows, lower highs, lower lows, lower highs. At that point, there is most likely a potential bottom incoming. Now, once we hit this first bottom here, you're not going to know that that's the bottom until we start forming something different. But as you can see, we come down to the bottom and we actually come up on resistance. And you can see that this little price right here, this bounce, like I talked about before, this is why support resistance also comes in handy, because you can trade this patterns and you can also trade support and resistance at the same time for double confluence. Now, when you're looking here, you can see that this right here says resistance, this line right here, but support can also react as resistance. Now, as you can see here, we came down, touched support, resistance, came down, touched support again, but now this is acting as our resistance, because when we came down here to this first bottom, our second high ended up coming only to the resistance, which is important with these double bottoms. Now, this is really when you're going to start to see this pattern forming, is when we come back down to touch this second bottom. This is when the second bottom comes down to the support twice and retests. Now, once we bounce off of this bottom or off of the support and we go up to break through this previous resistance, this is trading a breakout. 9 times out of 10, this is where most people enter their trade, but I promise you, it is very important to wait for that pullback, and that pullback is going to be right bouncing off of the most previous resistance level, going back down to the support, which is where we're at here, and going up into a breakout. There are plenty of other strategies as well, and I would highly recommend you look up some websites to try to understand some good patterns. These have helped me tremendously in trading, and I understand why some people don't like to trade patterns, because to be completely honest, you could also see something like this. You could mistake a double bottom where we come down, make a bottom, resistance, another bottom, and come up. You could mistake in that, for example, a symmetric triangle. And from here, you think that this is touching a bottom again, and you think it's gonna go up, which in my defense, I think that is really important and crucial as to why you should wait for these breakout points and bouncing off support of the neckline. Now, once you have a good understanding of a decent strategy when it comes to trading, execution is probably one of the most important things when it comes to trading. Finding a good entry is the key to scalp trading. Let's hop into the charts right now so you can see exactly how I would time an entry and an exit in a perfect ideal situation in the market. Okay, so we can see right here that we are in my live chart. You guys can see exactly what is going on in my trading view at the moment. Now, the first thing that I saw here was I saw a bit of support and resistance, of course. Now we have this level comes down here. This is live market, by the way. We come through, we bounce off this level. We had a little bit of a breakthrough below, but we actually touched this most previous resistance as well. Came back up, bounced off of this level 2 more times, almost 3 more times to give us a big breakout. Now, if I want to, I can actually drag this out as well. This looks like a pretty decent resistance level in our chart as of right now. Now, as you can see, literally with not bringing any patterns into this and just strictly trading off of this specific support and resistance zone, what is the key factor that I said to you guys earlier? When trading, you need to make sure that there is a breakout and a pullback. So obviously, somebody might want to go long here, right? This is a bounce off of support, and you might want to take a quick scalp here. That is totally fine. But if you're going for those big moves, which I like to do pretty frequently, you need to wait for perfect timing and decent breakout confluence. One of the biggest things here would be, I'm going to actually pull this out a little bit. So as you can see, our breakout formed right here. When we broke above this previous this previous resistance, we came above and fully conquered it and had a pretty decent day, right? Now, my confirmation here would not be getting in here. I would not take the trade here. I would see it go through our support, which realistically, it depends on how you chart your support and resistance, but typically you could chart it around here. Now, if we had a breakthrough, which we did, you can see these candles broke fully above, closed above our gray box here, which is very important for me. I need a close above. If this closes inside of the box or below it, or a candle wick comes above, just like right here, I won't take the trade. Now, as you can see, we had a pullback, which came back to this neckline, of course, a very perfect pullback, and this would have been a solid entry for calls and would have made you a lot of money. Now, you need to understand when to exit. For me, I like to trade with multiple contracts, so my exiting strategy is pretty simple. When it comes to exiting trades, I like to do this. I like to take my contracts and start scaling out at certain percentage rates, meaning instead of holding one contract and trying to get it to hit 50% or 100% or 200%, I like to play it safe. I will buy multiple contracts. Let's say, for example, I buy 10 contracts. Every 5 to 10%, I will trim off 1 to 2 contracts, meaning that, let's say, for example, the trade ran to 10%. At 10%, I would trim off 2 of my contracts and I would bring my stop loss from its original place, which might be 15% or 20%, give or take, depending on the trade. And I will take that from 20% to 15%, right? Then let's say my trade hits 20%. Then I'm going to trim 1 to 2 more contracts at 20% and I'm going to move my stop loss up to, let's say, 5% or break even. And once I move my stop loss to break even, that is when I continue my trims. And from there on, almost the entire trade, being that I am trimming off contracts consecutively, is going to be profitable. So I don't have a lot more time in this video, but I do hope you guys enjoyed it. Unfortunately, I couldn't go into crazy depth with this video just for the sake of how much time I have. But if you guys are interested in learning more, like I said, I do run a Discord called No Limit Trades, and I literally do this every single day from market open to market close. I call out plays. I have tons of educational resources, tons of great people in the community. It's an awesome place to be. If you have interest, I'll leave the link down below. Let's get it. Let's keep grinding. Hope you guys enjoyed this video. Peace out.